Dive in on this week's 5 things.
Let's dive in.
Point number 1, Bitcoin bears are not being honest.
Yeah. So look,
That was a sinister, yeah.
yeah. So Deep Knowledge Investing started recommending Bitcoin to our subscribers in 2020 when it was about 15,000. And it ran up and great, we're happy. And then it came back down, and the whole crypto bust thing back down to 15,000. And we didn't do a thing, right? We didn't sell it because one Bitcoin is still one Bitcoin. The thesis was unchanged. And we always had a long-term thesis on it. Now, over the last couple of years, DKI subscribers have actually gotten returns better than what Bitcoin has done. And the way we've done that is we were buying GBTC, the Grayscale Bitcoin Trust, which was the trust that converted to an ETF, an exchange traded fund. And the way we were able to make outsized returns on that is it was trading at a discount to NAV, that stands for net asset value. Basically, it was a vehicle we could use to buy Bitcoin at a discount. So rolling into 2023, so the beginning of last year, Bitcoin was just above 15,000. And it ran up through the course of the year to around 40,000. And the main reason for that increase was excitement about the coming ETFs, the coming exchange traded funds. They allow people to buy Bitcoin exposure in a traditional brokerage account. It basically was a way to open up Bitcoin ownership for pension funds, mutual funds, people who weren't comfortable with self-custody or didn't want to go on the crypto exchanges. I understand all of that. I mean, this is stuff that I'm comfortable with. And I know, Rob, you've done things like that. And a lot of DKI subscribers, they're fine, buying Bitcoin and engaging in self-custody, but not everybody is. And that's okay, right? I mean, if it were my dad, I tell him to just buy the ETF, right? It's just easier for some people. So we had Bitcoin running up. And going into the ETF approval, which happened in the first week of January this year, you had Bitcoin bulls like myself who own it saying, hey, look, this is going to open up Bitcoin ownership for a whole new group of people, new funds. There are trillions of dollars in pension funds. What if they start to take a 50 basis point? That's 0.5% or 1% position in Bitcoin, because they should have some exposure. And we should see Bitcoin run up on that. Now, there were bears on the other side of it saying it's priced in, which is a way of saying, look, you guys just saw Bitcoin go from roughly 15,000 to 40,000. That's because people were expecting this. And once you have the approval, Bitcoin's going to crash. Okay. And so what happened was Bitcoin at the time the SEC approved it was about 44,000. It ran down to just under 40,000. That's about a 10% drawdown. If you include the momentary spike that happened right after the SEC approved it, the max, the highest point of the year down to the bottom, it was a 16% drawdown. And, we talked about this on this show. We talked about how it was close. As a 10%, 16% drawdown for Bitcoin, is that really a big deal? Not really, but we had to admit the bears had the better end of that argument. And if you spend a lot of time on Twitter or X, as I do, what we saw were all the Bitcoin bears crowing in public. We got it right. These things are a disaster. It's all going to zero. And they had a field day for a couple of weeks. Well, let's talk about what happened in the month of February. In the month of February, Bitcoin ran up 58%. It's right. I checked this morning. It's at 62,000. Now,
62.
Yeah, 62,000. So that is almost a 60% increase in the course of a month. Now, if you are a Bitcoin bear and you declared victory over a 10% drawdown, a 16% drawdown over the period of a couple of weeks, all right, fine. But then be intellectually honest. And when it spends the next month running up almost 60% in your face, then there should be a mea culpa, right? Then just admit you got it wrong. And it's okay. Like, there's nothing wrong with admitting you got something wrong and selling a bad position. But my Twitter timeline is just really, really quiet with this. Maybe I unfollowed the wrong people. Maybe they're all issuing mea culpas and I'm not seeing it. I don't know. But match it, right? If you have a short-term thesis, then you're getting short-term results.
Gary, it seems like there is this groundswell movement of Bitcoin, right, and a run similar to a couple years ago. Is there anything that was predictable about that movement? Is it strictly tied to this ETF? Just thoughts there, because obviously Bitcoin, from a volatility standpoint, right, we see these swings, highs and lows quite often.
Yeah, so it's a great question, Rob. And I think there are two things that are correlated with Bitcoin, and then a third thing, which is the thing I really care about. The two things that are correlated, one, with the ETF approvals. Again, there are trillions of dollars in pension funds and mutual funds and people in traditional brokerage accounts. If you have like an RIA, a registered investment advisor, at most firms, they were not allowed to get you Bitcoin exposure. The only way to do it, a lot of firms wouldn't even allow people to buy the Grayscale Trust, the GBTC. Some people got around it by buying MSTR. And all of that's fine, but the ETFs really did open up new demand, and we have seen a big run up on that. The other thing is there is a correlation between Bitcoin and global liquidity, right? And so in the US, we look at M2, which is just a way of measuring the money supply. And so if you start tracking, and I think Lynn Alden has done really good work on this. Lynn does great work on everything. She's somebody I respect an enormous amount. Yeah, her intellect is phenomenal. Her analysis is great. But she's done some really good work on this, tying Bitcoin, its performance in dollars, to global liquidity, and which again, the money supply. And I think there's something to that. Now, long term, here's my assertion. My assertion is that the thing that makes Bitcoin fantastic is it becomes more and more scarce over time. It's deflationary. And we're basically 1 month away from the next halving, where the reward that Bitcoin miners will receive will actually be cut in half. And typically Bitcoin does run up into a halving at the halving because it basically means that the cost of mining doubles at that time. And the stock to flow ratio gets pushed more into Bitcoin's favor. And so, stock to flow, simply what we're talking about is the amount of new currency or new Bitcoins that can be added to existing supply. So right now, we have roughly 19 million Bitcoins that have been mined out of a total of 21. There are 2 million left to be mined. But the flow right now is about 900 coins per day. Well, in another month, that's going to be cut in half. And so that changes this. On the other side of that is fiat, which is just a fancy finance way of saying regular government currency, the way most people think about dollars or yen or euros or the British pound or pesos in a whole bunch of countries. And what we've seen is that governments can and will print unlimited amounts of fiat. So while the Bitcoin issuance schedule every 4 years gets cut in half, the US Congress spends trillions and trillions of additional dollars, diluting and debasing the value of the dollar. And so, if I have to sum all of this up, it's this simple. I can't tell you the dollar price of Bitcoin a year from now or 5 years from now. What I can tell you is that the purchasing power of the dollars you have in your bank account or wherever you're storing dollars in whatever form, they will have, the purchasing power will be lower in a year because of inflation, because there's more money being printed, more fiat being printed. 5 years from now, tell me what you think the price of a Big Mac or your rent or the cost to fill up your car or, a new gadget at Best Buy, whatever it is, the cost of things is going to keep rising. So the purchasing power of your dollars is going to be eroded. And that's why I like having money outside the system, things like gold or Bitcoin.
I hope the Big Mac stays right where it is, because that is a guilty pleasure of mine. And but I do see $20 Big Macs on the horizon, I feel like.
Yeah, somebody was put this up on X or on Twitter the other day. They had a receipt they bought a bacon cheeseburger a drink and a thing of fries at, I think it was Five Guys.
Yes, it was.
It was more than $20.
Yeah.
Right. And so, people were joking that, God, I can't remember. I think it was McDonald's. They handed out these coupons or coins that got you a free Big Mac. And they handed them out years ago. And, the price went from like $1 to $8. And people are saying, wait a minute, this is a better store of value than the dollar. So
that's too funny.
Right. So basically, if for anybody who's looking for some sort of financial way to avoid the decline in purchasing power of the dollar, we have gold, we have Bitcoin, and we have Big Mac coupons.